It is, well, it's Friday again. Still Friday. So, TGIF if you're looking forward to the weekend and all that. And Bitcoin and Solana, for example, have been doing pretty much what I told you they would be doing today when I made my little video earlier. I told you they were set for a nice move, and they sure did move nicely to the top side. And you look at why that is, well, look at the central daily ranges on the VEPs. Right? The central daily ranges of the VRE. Look at the Laplace distribution ranges on the daily and 4-hour areas. Look at the normal distribution targets on the 4-hour and daily areas, right? Look at the fact that there were intersects happening pretty much all week. And I told you guys that it was a very high probability we'd see movements throughout the weekend. We did, and especially by Friday. And lo and behold, that happened to no one's surprise, right? So that's literally what is happening, right? So if you look at the probability of the distribution, right, there was very high probabilities of distributions to those areas. Why? Because they were well within the range of targets, right, to the upside and the downside. They were well within the target ranges, and the assets moving into those target areas on the VRE levels was kind of a no-brainer when you line it up with the volatility and the entropy, right, that was lined up for those moves, especially if you look at the lower time frames, 15-minute and under, for example, right? There's really no reason that any of this should be surprising to anyone that's trading the low time frames, because frankly, I don't want to say it's obvious if you're not using the VEPs, but if you are using the VEPs, it's clear as day, right? But here's the thing. It doesn't matter if you're using the VEPs or not if you're not managing your risk well, okay? We get occasionally some people at Alpha Trading who, are eager beavers when they start out, but then they fail to internalize the main core message that we constantly teach people about, that we constantly remind people about. The number one thing in trading, like 90% of your quote-unquote strategy, is risk management. How about those puffy clouds? If you don't have good risk management, go home, like in the metaphorical sense. If you don't have good risk management, your name is mud, right? Risk management is literally like 90% of your strategy. And when we say that, we mean that, It really is the main thing that you need to learn about trading. Whether you're new to trading or not, it's the main thing you need to practice. And by practice, I mean when you're first starting out, you need to practice for no money to make sure you don't burn real money. And you do that by running practice trades, which you can do on paper, or you can do that on TradingView, or you can do that on any number of exchanges that let you have practice accounts. On TradingView, it's kind of convenient because you can insert, the fees of the exchange you're going to use or whatever, and you can practice doing it there. But you can also use the virtual servers of different exchanges. Not they all, but a lot of them have them. And those give you 100,000 up to 100,000 fake dollars or whatever to practice with. And you can just go ahead and play with that. But it's practice. It's not a game, right? And you need to practice the risk management. So, for example, right? One of the key things we constantly tell people is manage your position sizes properly, manage your trades properly. If the bias, quote unquote, and not really bias, but if the information is telling you the market is looking towards the upside, right, for the day, well, then you put your trades to the long side with your full capital, right, with your full trading capital. If the bias is to the downside, then you put your trades to the downside with your full capital, right? If you're going to counter trade those positions, then you put on a very, very small portion to counter trade, right? So if the bias of the information is saying is looking up for the day, right, then you only, but you want to short because you see a opportunity for a quick short on the day that is going up, because it will constantly be distributions and mean reversions throughout the day. You put on like a quarter of the amount for the counter trade. You don't put on the whole amount, right? And again, you're not counter trading the information. You're just seeing opportunity on a very low time frame to do a move to the other side. You're not saying, oh, the information says down, but I'm going to go up. No. If the information says down, then you go down. If the information says up, then you go up, right? Because again, the information is leading information. It's telling you where it is likely to go, not where it has been, which is what Voodoo TA tells you. Leading information tells you where it is going with a very high degree of certainty. That is the difference. So you manage your risk by managing your position. And that means managing your position size. You manage your position size by not over leveraging or not using leverage at all, because every bit of leverage you use works against you. You're borrowing money from the exchange when you use leverage. It's their money, they want it back. The only way they get it back is if you lose your trades. And if you are borrowing money at high rates, you're also decreasing the amount of leeway that you can be wrong before your position is liquidated. And you're also increasing the amount of loss you will suffer for every little bit that it moves against you, right? So if with no trade, you would have lost $1 on the wrong side before you got out, if you used 5x, you'll have lost $5. You may not think $5 is a big deal, but it's 5 times worse than $1. And you don't use stop losses that you insert on exchanges. And I know every Voodoo TA shiller in the world will tell you, oh, how are you kidding me? That's crazy. Not using stop losses. That's really risky. No, stop losses are risky, because stop losses are big red flags of surrender, or white flags of surrender that you're waving in front of the exchange's face. Say, come here, grab my flag, and I'm out. And if you're trading crypto, which is an unregulated asset class, effectively, globally, and yes, there are regulations around certain elements of crypto, but generally speaking, when you trade crypto, it's not regulated fully. And that means B-Book exchanges can and will and do trade against you directly. They have trading desks full of traders whose job is to take your money. And even if you're using an A-Book exchange, or you're using a decentralized exchange, right, you're still trading against, in an A-Book exchange, you're trading against other whales and institutional traders who have access to order flow faster than you do. They pay for that access, and they get it directly from the exchange, as opposed to you. You don't pay for that information to be sent to you directly and immediately like they do, so you get it at the regular snail's pace, relatively, that other retail traders get it at. And that means you are at a disadvantage time-wise. And that's not good. if you're trying to beat the markets and at the same time use leverage. They're going to take that money from you. If you put a stop loss there, they're going to take that money from you. First of all, even if you don't put a stop loss, they know relatively where your pain points are because they see your trading history. Where am I from? Where do I come? I'm in northern Israel. Even if you don't use a stop loss, they see where you have given up before. They know the percentage loss that you can handle. But maybe if you don't put a stop loss, they can't guess with 100% accuracy. And if you're smart, you'll know that when you are trading low time frames, as soon as it goes against you, you just get out immediately. If the market's moving relatively slowly, right, then you just limit out, just like you limited in. But if you see it starting to move quickly against you, well, then you don't limit out slowly. You mark it out, even if that means having to rip off the Band-Aid. Again, better to lose a tiny amount than to lose 1% of your capital, 2%, 5%, 10% of your capital. Right? Why would you do that? That's crazy. It's not worth it. Right? And same thing to the upside. Right? The ratio has to be much better to the upside. And at the same time, you should not be holding on for greedy gains. When you hit a target like a standard deviation level or a Laplace distribution level, you take your profit. Doesn't matter if it's a small profit. A profit is a profit. What matters is that your profits are greater than your gains, preferably at least 2 to 1. But more importantly, that your profit is in fact a profit. Your profitable trade in fact ends profitable even after all of the fees that you have to pay. Because if you don't end your fees and trading costs and everything else in the green or in the black, right, with your trade, if you made $1 profit, but then you have to pay $1.50 for your trading fee, well, then you've lost 50 cents. And that's a losing trade. So you need to know where you need to get to break even. And you do that by very simply calculating the spread. Right? You'll see where you need to be profitable. If, for example, you're on an exchange that charges you 0.1% for maker fees, right? And maybe 0.2% for taker fees, then you need to know where do you need to be. By the way, in some places it's much worse. It could be 2%. It can be more, right? But if you get on a decent exchange, you will probably find that you're paying less than 1% in fees. The lower the better. In some places will give you 0 fees on certain kinds of trades. It might be spot, it might be derivatives, it might be perpetuals, it might be whatever, right? What they will entice you with is incentives like leverage, which again is fool's gold, right? It's not yours until it's in your hand. It's not in your hand until you win it in trades, right? And you're not going to win in trades if you over leverage and you lose trades. It's just not going to happen. They're not in the business of giving you their money. They're in the business of taking your money. That's what exchanges do. You may not like to hear it, but it's true. You may have yourself convinced that somehow you know better than them, and that if only you could win that one trade at 50x or whatever, and would go to the moon, you'd be set for life. That's not how it works. Right? It's just never how it works. When I say never, of course, statistically, yes, there is a 1 in like 10 billion chance that you could win a significant trade that will be amazing. But there's a much greater chance, probabilistically, that you will lose money. Why? Because 99.9% of traders lose money. The ones that don't are the ones who trade smart. They buy low and they sell high. And the ones who do that best are the ones who manage their risk the best. And the ones who manage their risk the best tend to be the people who know their numbers the best. And the ones who know their numbers the best tend to be the ones who have or are the best calculators. Well, what are the best calculators on the market today that you can get your hands on as a retail trader? If you don't already know the answer to this, do I really have to remind you? Right? The single best place to get volatility and entropy calculators, probability and statistics calculators for trading as a retail trader is at Alpha Trading. Right? alphatradinghq.com/discord. Right? That's the community server that we built. That's the community that we built. It's small because people don't want to learn, and that's fine. But if you are one of the people who is serious and you actually want to learn, and you're not going to blow your wad on some stupid over leveraged moves, right? And you're going to actually pay attention and listen to the very well thought out teachings that we give there, the educational information that we give there, you have a much greater probability of being consistently profitable. It's really just that simple. Now, you do need to learn, and you can learn it for free. Or if you're someone who prefers one-to-one sessions with a tutor, well, you can learn it from me, or you can learn it from Bilbo. We offer tutoring to a very small number of people, right? We don't have like an open class of 30 or 40 students at a time, where you're not going to get attention. No, we have live streams are for that, right? Those are free. You want individual attention? Our time is worth money, and then some. So there's a price. It's not very heavy. In fact, the price is kind of ridiculously low. Probably should increase it. It's probably gonna happen soon. Because in addition to getting like a dozen hours, like 12 trading sessions, or 12 sessions of tutoring with myself or with Bilbo, you actually get an entire year of our Pro Traders subscription package, which is just by itself, we normally charge like 1,100, almost 1,200 bucks, I think, a year. It's under 1,200. It's like 1,100 and something per year. That's when it's not on sale. When it is on sale, it's like $831, I think, something like that. At the current prices, again, those are prices we've kept pretty much unchanged for years. But as the years have gone by, we have increased the effectivity of our tools by making them more powerful. So the tools are even better now than they were when we started making them available for purchase years ago. So there's, again, a much greater than zero probability that the prices will go up. And those prices are ridiculously cheap anyway. If you know anything about trading, you know that these TA people are selling you garbage tools for hundreds of dollars a month, it's easy to spend $200, $300, $400, $500 a month easily on their lagging technical analysis tools that give you absolutely no edge. Right? They put you at a massive disadvantage compared to the smart money on the market. So why would you use that garbage? And why would you pay for the privilege of having such garbage at your disposal? Makes no sense. If anything, get our free tools. Completely free. Learn to use those. They work amazingly well. Those are the tools we used when we started off trading, because we didn't have our advanced tools yet. We had to build them. It takes time. Right? The first ones we use are the ones that we give away for free. Not because they're not good. They're incredibly good. We give them away so you can learn the basics of how to trade this way. And as you get better at trading with the free tools, you can try our non-free tools for free. We have a free trial. You can try them for free. Right? Once you learn the basics, you just open up another ticket and say, hey, thanks for the volatility starter pack. Now I'd like to try the free trial of the Pro Trader subscription. And voila, you get the free trial. Okay? But if you try the free trial before, honestly, it's a waste of time. You're better off, in my opinion, learning the free tools. It's up to you. There are some people who just jump straight into the free trial. There are also some people who just jump straight away into buying the tools. But that's okay too. Listen, if you buy the tools for a year, and you don't want to bother learning the free tools first, you just want to, learn them all at once, by all means, you can get the free tools. I would recommend, in that case, investing in at least 6 months or a year subscription. Why? Because we know what happens with people who buy them for 1 month. Right? You buy them for a month, there's very slim probability that you're going to be using them all to their potential, anywhere near their potential, within a month. There are some people who do it, but it's a very small percentage. You're better off buying a 6 months or 12 month subscription and give yourself time to actually learn while you have all these tools at your disposal, and then trade and make a serious bank. Because you can pay for that 6 months or a year, depending on your position size, in a single trade. Not a problem. There are people who do that all the time. Right? You have our tools. Think about it. If you have a Bitcoin and you put just one Bitcoin on the line, like you have one Bitcoin of trading capital that you can put on your exchange, just as an example, and you have that Bitcoin on the line. Obviously, that doesn't mean you only have one Bitcoin. Hopefully, you have at least 5 or 10 if you're doing that. But let's say you have one Bitcoin on the line on your exchange, and you make a trade. Price moves $1,000, and you take your profit. That's not even a 1% move at prices over $1,000, $100,000, right? It does that all the time. Boom, you just netted $1,000 minus whatever the fee is. You don't have to be greedy to do this. Even if Bitcoin was $20,000 again and only moved $200, 1% move, which again, it moves 1% all the time, right? In like pretty quick succession. Does that without blinking an eyelash. Blinking an eyelash, batting an eyelash, without blinking. Right? Bitcoin is very volatile, just as are other assets in the crypto market, and you can easily do that. Right? 1% all day, every day. It's a matter of risk management, a matter of actually doing it, having the patience to learn and do, and to make mistakes while you're practicing, not for real money, as opposed to practicing with real money, which, when I say practicing with real money, I mean trading, but like putting it to practice the same way a doctor puts his or her skills to practice when they engage in doctoring stuff. and and you're off to the races. And again, it doesn't matter if you have one Bitcoin on the line. It doesn't matter if you have $100 on the line. It doesn't matter. You can increase any position if you have good risk management and the right tools and methods to be consistently profitable. If you don't have that, good luck. You're dealing against incredibly fast and powerful sharks who know how to take your money very well. That is their job. That's what they do. So once again, alphatradinghq.com/Discord. It's free to join the community. It's free to get your free access. I have to make a ticket to get the free access to the volatility starter pack. It's free for all the educational material you need to learn. It's free to chat with other real traders using the same tools. It's free to join the live streams, which start Monday through Saturday, every Monday through Saturday from 11 a.m. U.S. Eastern Time. All that's free and more. See you guys there. Happy trading.